Hello and welcome to this week's edition of the Friday Market Update. Okay, I have a question for you. Have you ever been on a diet and you just can't shake that last 10 pounds? So in the beginning, you may have had some excess weight and it was fairly easy to shed the first 15 pounds just by changes in the diet. A little bit more exercise, a little less eating, and just being more aware and focused on your desired outcome. However, when you get to that last 10 pounds, it means further refinement of your diet, maybe exercising a little bit more and not going off the deep end, having that big, delicious carton of ice cream, or go a little wild with an extra whiskey after golf. So that's where we stand with inflation. The US was able to shed the excess pretty fast. We peaked at 9.1% in June of 2022, and the Fed put us on a strict diet, raising interest rates 11 times starting in March 2022 before we got too heavy. Now, it became very strict diet quickly, and the Fed funds rate went from 0.25% to the current rate of 5.5%. That was a lot of digestion to get in the way. So at the same time, inflation went from 9.1 all the way down to 3% in June of 2023, but we have hit a wall. We're now back up to 3.5%, gaining a little bit more weight. It's hard to be so disciplined for so long. The excess fat is gone, but we still have to lose the last 10 pounds. As far as the Fed is concerned, they want inflation to be 2%. The Fed is most focused on the core PCE, personal consumption expenditure, to gauge their inflation target. The core PCE strips out the volatile food and energy component, and this currently sits at 2.8% as of the release today for March 2024. It was pretty much the same as last month. What's the holdup on why inflation has gone flatline? The consumer just doesn't want to stop spending. They got so used to spending during COVID with the infusion of cash into their bank accounts, and now they are maxed out on credit cards and spending all their savings. The savings rate is just going down. So we just don't know when the coffers will run dry, and I think it's going to take some time. So that last 10 pounds of inflation is going to be hard to shed. And what does that mean for mortgage rates? Inflation is the nemesis of Wall Street. And I think we're going to be going sideways, if not up a little bit through the election. So here's the opportunity, because it can't be all bad news, right? For your families buying or selling homes, it has been talked about almost ad nauseum. When rates go down, home prices are going to go up. You hear that over and over and over. One of the most interesting things that we've seen this year is that despite mortgage rates going down, guess what? The median home price has gone up almost 5% year over year. So these rates are not like stopping home appreciation. And I've said it many times before, we have a supply issue with homes and not necessarily an interest rate issue. There are simply just not enough homes for sale, and there's plenty of buyer demand. We are seeing more families teaming up to help each other, whether it be moving in together or having someone co-sign with them. Life just happens, and people are tired of waiting. You got new babies, breakups, new job, retirement, engagements. People just need homes for all different reasons, and the market is going to continue to evolve. So those that become creative, suck it up right now, and buy now will be rewarded long term with a lower price now and being able to refinance down the road. So if prices are going up with higher interest rates, can you imagine how fast prices could potentially go up when mortgage rates actually do come down? So educate your families, keep them motivated. I can help get them over the fear of making the wrong decision just by all the data that I have. So my CIA analysis, credit, income, asset, really walks them through fifth grade math so they can feel empowered to purchase and know exactly where they stand now and whether or not it's right for them right now. But anyways, hope you all have a wonderful weekend. Stay on your diet, and we'll see you next week. This is Gaylord out. Bye-bye.